So we're going to talk about gold. Who would have thought, right? Gold on top of gold. War chests full of this stuff. But maybe not all at once. Run a YouTube channel long enough, and the commenters, they just kind of make their way into your psyche. They become little voices in your head, and all the voices, patient, doubtful, overly exuberant, they're all there. The line that stands out, though, is how gold is a terrible hedge. Now, it could just be that the real people saying that, not just the ones in my head, grabbed onto an idea being told by somebody in that overly exuberant camp. They didn't like that idea of being patient, and then they dropped into doubt. And I think that it's safe to say that with all the hype around here, some people probably didn't have a good idea of how gold and silver actually operate when they came in. Now don't worry, I'm not going to take the opposite side of that debate. I'm not going to say that gold is only going up, but to the idea that gold is a terrible hedge, an idea that comes up a lot, well, we have a few examples that run counter to that. The first is just longer period of time from early 2020 to now. Gold closed out 2019 in the 1500s, and if you look back in 2018, it was in the 1200s. So we have seen considerable gains over the period of the time most affected by the pandemic. So I started this channel in early 2020, and I was seeing people calling for progressively higher numbers as the year went on, to the moon crowd. And that was more about silver, I suppose, because that's what the majority of the YouTubers were most familiar with. But if you were following the playbook at the time, it was buy, because prices were going parabolic. And if that was your expectation, well, the reality was probably pretty disappointing. The part that I think that everyone got right, though, is that gold is a safe haven. When things get bad, gold suits up, prices jump. But there's a point of resistance with gold since it doesn't yield gains. You can't just drop all of your capital into an asset that doesn't produce revenue. So it becomes a hedge to your assets that do. So if people invest in fewer yield-generating assets, or maybe just invest in risk-on growth assets, well, they have less need for risk-off assets to balance out those portfolios. So gold has a governor, maybe a restrictor cap. When the population is being conservative with their spending, it's still a hedge. There's just less to hedge against. And as we've all seen by now, as things begin to seem normal again, well, the price of gold settles back down. Another example would be the more immediate price jump that we saw last year, in late February of 2022, when Russia invaded Ukraine. Gold quickly jumped from $1,800 to $2,000. So gold again was acting as a safe haven. It was a hedge against bad things. But what we saw the remainder of the year was the price of gold settling back down again. That was after the invasion didn't seem to be spilling over, didn't seem to be having an immediate impact outside the region. So I'd say again that it was more of a hedge when things were uncertain, and then it tailed off as the public's attention widened back out. And that's what we're seeing again right now with the gold price reacting to the immediate bank situation. And it feels like there's a pretty compelling case to run out and buy this stuff. I would also say that it's pretty hard right now to argue gold's role as a hedge. Price action comes back down if the situation improves, but it will probably stay high if it doesn't. It'll go up if it gets worse. So there's your evidence of gold acting as a hedge. I think it's pretty clear. It's easy to forget, though, that as situations move out of focus, either they improve or we learn to deal with them, that the need for a hedge drops back down a bit. It's just common sense. I'd say there are two takeaways here. The first is that if you're ramping up your buying at the onset of these events, well, gold is costing you quite a bit more. The second is just a reinforcement of what gold does, how it operates beyond its resting state. If you have a strong position in it, you could use it when times are tough. You could then fill it back up when they aren't. And that's the war chest strategy. And it's not a bad way of looking at things. The way I see this presented way too much, though, and the way that some of the voices in my head talk to me, is this idea that short-term moves will remain as trends. We heard people talking about gold and silver to the moon in August of 2020 because the short-term move was on a steep incline, but it did not hold as a trend. We saw the same thing happen last year in late February with the invasion. People were forecasting trends based on the immediate move. What we're seeing today is the same. The difference is that we just don't know how bad the banking situation is yet. There's the real issue that we can't see. We don't know if things will unwind. And then there are these one-off bank-specific issues. And there are more than 4,200 banks in the United States alone. And in this current environment, we're going to hear if any of them fail. It's like 4,200 squirrels running around. Eventually, one of them's going to get into a power transformer, going to get zapped, and we're all going to see it running across the yard on fire. So I couldn't be a whole lot more bullish on the gold strategy. I think having some savings in gold is good in its own, in its resting state, especially if you're buying it incrementally. Buying it redirects wasteful spending into savings. It helps you hold on to it because nobody wants to sell their gold, and it sucks you in a little bit in a good way. That's the basic practical side. And then on top of that, it just steps up in crazy times. I think we've got a great example of that happening right now. Just look at today. We're seeing another bank, First Republic. It's sliding, and gold is up another 2%. So gold is doing everything that it's supposed to do. You just have to remember that if things cool off in the banking space, gold prices, they're going to cool off too. So don't pour everything you have into gold expecting the high prices are just going to keep going higher and higher. The better strategy here is to try to fill up the war chest when things are calm, when prices are lower. Okay, so let's call it good there. I added a new poll asking which price we think comes next, $17.99 or $2,000. That's in US dollars. And with about 5,000 votes in, $2,000 is beating $1,799, 2-1. But let us know what you think. Let us know what you're up to. Hit us up in the comments. And then while you're there, be sure to hit the like button. If you found any of this interesting, be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.